Okay, welcome back. We're now going to look at the non-current asset register. So, with the non-current asset register, this is an internal control document. Non-current assets generally are of substantial value to the business. They're worth a lot of money to them. As a result, we need to make sure that we keep control over these assets to make sure that they are in the location they're meant to be in, that they're not damaged, that they have the value and it's all correct, and essentially we know where they are. Okay? Now, the problem that we have with non-current assets, particularly when we account for them, is when we account, let's say, for our buildings, we have the buildings cost account and the accumulated depreciation for buildings account as well. Now that is the cost account and the accumulated depreciation account, only two accounts for all the buildings, so the entire portfolio of a business's buildings. Which means then, by looking at the ledger accounts, management of the business can't really see, by looking at the T accounts, what exactly they have in their buildings. So they don't know where their buildings are or what value each building is. Okay, because they're all going to be aggregated into those two accounts. So a non-current asset register is really vital, so then we can keep that control over each individual asset that a business holds, because they are of substantial value. Now, a non-current asset register is generally maintained by the finance department of a business, and usually that non-current asset register is then reconciled with the ledger accounts, but also used as a means of checking, right, I have building X in Luton. Is building X in Luton? Yes, it is. It's all there. It's fine. Or even for movable non-current assets like a motor vehicle. Right, we have motor vehicle with registration number R57XYZ. Where is it? Salesperson A has it. Excellent. It all physically exists. So it's good to keep control over it. Like I say, to control the individual asset value and also to verify or use to verify the asset's existence. Now, companies can, or businesses can keep a non-current asset register on a specially designed software package, but a lot of the time it's kept on an Excel spreadsheet and kept very simple. So, let's have a look at what a non-current asset register looks like. So, having a look at this then, we can see that for each class of asset, we'll have a non-current asset register. So in this case, our non-current asset register relates to motor vehicles. So we have several columns in this non-current asset register. First of all, we have the asset type. So which class of asset is it? Is it buildings, motor vehicles, fixtures and fittings? Plant and machinery, etc., etc. We'll then have the date. So usually it would be the date purchased and then any other significant dates in relation to that asset. So maybe the carrying value at a date or the depreciation charge at a date. We'll then have the description of the asset. Now that description could be the name of the asset, the specification of the asset, the colour of the asset, its item code, or maybe its registration number if it's a motor vehicle. So you can see in this case then, on the 1st of June 2005, we purchased a motor vehicle, and that motor vehicle was a purple Ford Fiesta. So you remember when we talked about reducing balance depreciation in a few recordings ago, I mentioned my purple Ford Fiesta, and it's cropped back in here. I love that car. Anyway, that motor vehicle cost us $8,000. So you can see the cost column, the original cost of that asset would be $8,000. What we then do is we have a column recording the depreciation on that purple Ford Fiesta, that specific type of motor vehicle. So we can see that the original cost of that individual asset was $8,000, and in the year ended the 31st of December 2005, we can see that the depreciation was $2,000 charged against that particular asset. Notice then that the cost minus the depreciation will give us the carrying value or book value of that individual type of motor vehicle. And you can see then that was the year ended December 2005, and then you can see the next transactions 06, 07 were again depreciation transactions, and each time you're charging depreciation, the carrying value will go down as well. So I can see at a glance, looking at this record, what depreciation has been charged and what the value in the books of the business are in relation to this purple Ford Fiesta. Now remember, a business could have several motor vehicles, and you would just have one big balance of non-current asset cost, one big balance of accumulated depreciation. By maintaining a non-current asset register, you are analysing each individual asset and looking at them on an individual basis. So it's a good internal control document as a result. Now notice then, in the year ended 31st December 2008, we disposed of the asset. So the final two columns at the end would be the disposal proceeds and the disposal date. So we can see then that the disposal proceeds were $1,500, and we disposed of it in November 2008. We can see clearly then that the charge to the statement of comprehensive income as a profit or loss on disposal would be the difference between the proceeds and the carrying value at the date of disposal. So 1,875. This is the chance for you guys to show off at home. Is that a profit or loss on disposal? You're all going to say to me, Natasha, it is clearly a loss because I sold it for less than its carrying value at the date of disposal. So it just makes everything a lot easier to see, a lot easier for the business to manage its non-current assets on a day-to-day basis. And sometimes the total balance in the asset cost account will be reconciled with the cost column of the non-current asset register. Does the value of all my assets as a whole in the ledger accounts match up to the total of the individual balances in the non-current asset register? And the same could go for accumulated depreciation, disposals, etc. And that's it. That is the non-current asset register. Okay, so understand its purpose, and if you were ever given one of these in the exam to look at, hopefully you should be able to interpret that effectively. Thank you.